Hello and welcome. This is John Person reporting for PA Stock Alerts. It is Sunday, February 12th. Don't forget Tuesday, Valentine's Day, everyone. The chart in front of you. Very interesting concept here. It's a relative performance of the different markets. As you can see, an overall graph of the trends. The markets are listed in this order. 2903 NASDAQ 100, 12801, that would be the Dow. 1342 would be the S&Ps. 131 is actually the FXE, the Euro Currency Trust. 167 GLD, 7304 XLE. All right, so this is the performance since the beginning of the year. From 1230, here's what has transpired. If we take a look at the Euro currency, actually the Euro currency is the worst performer of the markets that we're looking at, but it is not down on the year. Since 1230, we're actually up, as you can see, 1.8%. The Dow is up 4.9%, but don't forget the Dow was up 5.5% for the year. So that equates to, if you add the numbers again, almost 10.5%. The black is the XLE, up 6%, 5.9 to be exact. Green is the S&Ps, up 6.8. But remember, the Dow was, or the S&Ps was flat on the year, and of course the gold is gold, and it is, as you can see, up over 10% from 1230 or through the end of the year. And then of course this purple with just an incredible so far gain of 11.5%. Now look where we were on Thursday. Thursday we were up at around 12%. So we're starting to see the NASDAQ, but notice all the markets are starting to arc lower. What's this black line? Why is it peaking its head up? I just wanted to show you a comparison chart. Purple here, 12801. As you can see, this is the Dow. I just wanted to compare what this magical black line is, this downtrend market, what that really is, and you can see it right up in here. XLE versus NASDAQ. It's a spread chart between the energy sector, XLE, and the NASDAQ. So if you're long the XLE and you started to buy energy and sell technology as a spread, obviously you've just been hammered. But notice what we're seeing happen here. A little uptick, which means to me, it looks like they are coming out of some of the richer technology and maybe blue chip stocks and seeing a little bit of sector rotation, and just one day is not going to be the confirming nail that puts the in the coffin, so to speak. But we are seeing from a strong downtrend, we are seeing a confirming reversal for one day. So here's the thing: because of the heavy weight of Apple on some of the indices. But more importantly, I wanted to take a look at all the markets. We could start to see that there is a little bit of profit taking going on. As you can see from our peak highs, it's occurred in the gold. It's as we see with the euro currency. You can see it in the Dow. You can see it in the S&Ps. You can see it in even in energies here. So I think what it is just from a relative performance standpoint, energy will not be as bad. We should see energy at least not go down as much as technology, which means tech stocks should go down. The overall market might be led lower for a temporary move to the downside. That's what that means. All right, this next chart is just we've got three different events transpiring here. We have advanced decline comparative ratio. As you can see, advanced decline really broke out of its highs, the summer highs. We have on balance volume, which signifies that this little rally that we've had has not been on tremendous upside volume. And the very bottom is a seasonal trend. As you can see, we start to see seasonal weakness going into the first week of March. The fact that last week we formed a doji in the S&Ps and we were at or near predicted monthly resistance, I think may spell a little bit of trouble going ahead for the market. Now let's take a look at the NASDAQ real quick, as represented here. And we were, as you can see, right at the monthly pivot resistance. On balance volume, same picture. It did not show a heavy participation in this rally as much as we've broken out of new highs, as you can see right here. We clearly broke out of new highs. Advanced decline clearly broke out of its highs, and of course no one ever called me an artist, but as you can see, clearly broke out of the highs. Notice that on a weekly basis, prices closed up, advanced decline, moved lower. So it's showing that we are seeing some internal market weakness here in the short term, and the fact that this rally was not on a great upswing of volume tells me we could see more downside, or at least in the technology sector, it could be a little bit heavier weighted. And so we're believing that we're going to see a pretty substantial correction, maybe 2, 4, or 6% in the market here. Now, as a result, even though we like the energy sector, if we do see more further downside, we just missed getting into PDC by a penny. The fact that it closed at 929 doesn't make us all that happy. We ended the week with a sell signal on top of it. Maybe some more coming into this gap level. We take a look at the weekly chart. The weekly chart forms, I guess you could say, make a case for a bearish piercing pattern. Dark cloud cover is what we would, the bearish sign is a dark cloud cover. Didn't quite cover and close into the midpoint, but you could make a case for it. It's not an aggressive bullish standpoint by any stretch of the imagination. Volume here, from a seasonal aspect, we want to be in this stock, but we might see some more downside. So therefore, let's see what happens and transpire, because this is option expiration week. Let's see if we have some more downside. So we want to just go ahead and cancel the orders to get long PDC. So just cancel PDC straight up. As far as our current positions, though, looking at YHOO, YHOO generates a nice weekly buy signal, and it was on some significant volume. If we take a little trend here, we could just take a quick stab and say, hey, on the upside, we broke this little down trend line. We broke out on volume. So that's kind of healthy to see. Like to see that. Nice significant move. So the weekly's in a buy. We're seeing a swing high. We'd like to see it close and break out of this peak high and that peak high. We're going to keep our stops right where they are at 1528. That's where they've been. No reason to adjust it. This is a half position. So let's just show you where our stops. There it is. It's just underneath all this harm's way. And I think if the market continues higher, look at that daily upswing in volume as we made higher highs. Look what we did. Followed through on decent volume. Quite the opposite of PDC, as you can tell. So therefore, let's stick with the winner and the leader, YHOO. All right, now on MOO, we took half a position profit on MOO. We've got our stops at break even. We generated a daily sell signal. Our seasonal trend continues to move higher, but we start to run into problems, as you can see, around the 14th. On balance volume on this breakdown, there was some significant volume associated with Friday's sell-off for that sector. So we take a look at a weekly chart. Long shadow on the candles. We are coming into support with this moving average. So you could see an argument for a trend to the upside, maybe a sideways range to a little bit lower. So if we get stopped out, I just don't want to get stopped out prematurely. So we've got it at break even. I'm not lowering my stop by any stretch of the imagination because I'm aware of this gap down in here. So big difference. I'd rather get stopped out at break even and take a profit on half the position. And have let the trade run, and to see what it's going to take us, because that's the way we trade. It's better than have been short down in the hole as many traders were. So with that said, I think that's the proper course of action for our position in. All right, let's take a look at Coventry Health. Coventry Health, look at the volume associated. We tried to get in here and we just missed it, as you can tell by just a tad. But just in case it comes right back down into this level, look at the volume associated with this little tiny pop in the market. So if we take a look at just draw a horizontal line, you can see that we definitely saw some decent participation in Coventry Health. From a seasonal aspect, we still see strength in the market, so we're going to stick with this trade, or at least try to get long this market, so don't cancel your stops. We had a nice weekly breakout in volume, even on a daily chart. Look what we had. 1 day upside. So really has some decent upside attraction. So we're going to still try to get long just in case the market gets in a little ranginess with the rest of the market. So hold your orders to get in CVH at this point. All right, Tom and I had talked about potentially looking at SDS and looking at some options on the 17 and the Marches. And as you can see, we formed on Thursday a doji, posting a low at or near predicted monthly support. We had a little bit of pop at the upside on Friday. It closed higher, but we didn't make an official. We had a high of 1675. We did close at 1677. So by 2 cents, we have, an official high close doji. I think we might see a chance for a little bit of a pullback. We'll take a look. On balance volume, not significant, but we definitely saw an uptick on that little close there. So even though the market had a lower close than open, we still closed higher than that high. That gives us a potential trigger. We'll be looking at the options. Why buy them on Friday if you're going to have a couple days of decline? Or maybe you get a couple days of time decay, some theta works in our favor. We might get them a little bit cheaper by, let's say, Thursday or Tuesday, Valentine's Day. So with the Greek referendum needing to be passed by the 15th, we could see, the market maybe stabilize here, give us a chance to get in. And if our triggers and we get at least a bona fide buy signal in here, we will be sending an email alert to take action on getting long SDS. Or at the very least, we'll be looking at a bullish option position in SDS. So if we're bullish on SDS, then we would expect if the one market that's been the strength and leadership is in technology, the Qs will probably be the one that gives up the most. So one of the things that we're not too forceful about jumping into the market with the SDS. We want to wait for a little bit more of a triggers. Look at the low, as if you'll see up here in the chart, and I scroll my mouse over. The low on the Qs was 62.32. So where did we close here? We closed at 62.47. So we didn't form a lower closing low. We don't have a crossover. There's no sell signal. Let's give it another day or so. On balance volume was a little bit weaker, and as you can see from our seasonal trend, we typically maybe peak out between the 14th and the 16th. So we have a little bit of time. Let's see another day or two, and then that's when we see a decay. So that in price. So just wanted to set you up with a warning. These are the things that we're looking at and want to take a position with the proper triggers. All right, one of the products that we now can look at, track, and trade are the VIX midterm futures. If we take a look at our Persons pivots, didn't quite get to monthly predicted support. If we take a look at a daily chart, though, we had a high close doji on Thursday in the VIX futures absolutely popped, generating a daily buy signal. But might have a chance to see if the market pulls back, fills that gap with this type of action. And looking at the VIX futures and its move up here, I think possibly we are seeing at least someone taking protection. And what I think Friday, what the pop was, is that volatility the VIX was a little cheap. Made sense to have some protection over the weekend. If there was no adverse news or no bad news, they'll probably sell out of those positions come Sunday, Monday morning. So therefore, that's why I want to give it a couple extra days. Everyone, I hope you found this information useful, vital, and helpful. And of course, if anything needs to be done, we'll certainly send an action email alert out to you. Thank you all. Hope you had a great weekend. And by the way, for all those that met us, Tom and I, both at the Money Show in Orlando, thank you so much for stopping out and seeing us. Tom worked the booth with the Money Show. We did a stage presentation, and Tom had graciously invited me to be on the panel with Greg Morris and Buff Dormeyer. It was a really nice event. So if you're in the neighborhood, don't forget, next weekend, both Tom and I will be at the New York Traders Expo. If you are coming in, please say hello. We look forward to seeing you. Everyone, thanks again.